While financial markets are enjoying the Christmas festivities, analysts are trying to puzzle out how Wall Street is going to close the year. InstaForex analysts are ready to share their viewpoint about the final trading days of 2023. The question is whether Wall Street will resume its Santa Claus rally after Christmas. Will sensitive stocks come to optimistic expectations? Is the stock market over-optimistic about the Fed's monetary easing? The benchmark stock indexes closed last week with a solid growth. All of them added to their previous daily gains, though they closed on a Friday with a tepid results. The Dow Jones inched down by 0.05%. The Nasdaq and the S&P 500 also logged modest growth. The S&P 500 rose by 7 points or 0.17% to close at 4,754 points. Today, the indexes are in suspense ahead as the market will open tomorrow. On a Friday, the stock market was thin on the start trading day. The economic data was softer than expected, so investors reinforced their hope for the cycle of the Fed's rate cuts next year. In the second half of the day, all three stock indexes lost steam following the initial growth in the light of the economic reports. The PCE price index by the Commerce Department showed that inflationary pressure had been ebbing away, and the Fed's preferred barometer of core inflation slipped to 3.2%, a downtick lower than the expected 3.3%. The best performing sectors included energy, materials and consumer goods, while consumer discretionary saw a decline. A separate report showed that the new orders for durable goods were well above analysts' expectations, a positive surprise that bodes well for the U.S. corporate spending plans. And together, they bolster confidence that the central bank will not only begin cutting interest rates as early as March 2024, but manage to rein in inflation without plunging the economy into recession. Financial markets estimate the likelihood of the Fed cutting rates by 25 basis points in March at 74 and 10%, according to CME's FedWatch tool. The three major indexes posted weekly gains for the 8 weeks in a row, with the S&P 500 up 0.4%, the Nasdaq up 0.9% and the Dow up 0.1%. The result marked the longest weekly winning streak for the S&P since late 2017. For the Nasdaq and Dow, this is the longest streak of consecutive weekly gains since early 2019. The S&P 500 is now within 1% of its record close reached in January 2022. If it closes above this level, it will confirm that the benchmark has been in a bull market since it bottomed out in October 2022. Notably, in the corporate sector, Nike shares tumbled by 11.8% after the sportswear maker cut its full-year sales forecast due to cautious consumer spending. As for today, most markets are closed today for Christmas, and some will be closed on Tuesday. Plus, on a Friday, we will have an early closure of stock exchanges, in particular the UK. The week does not promise much news, and the data includes weekly jobless claims on a Thursday and several housing market reports that will have little impact on the markets. Of course, trading volumes are expected to be thin for the rest of the year as investors are taking holidays, making stocks especially sensitive to unexpected news or big trades, so attention will be focused on the corporate news. At the same time, investors may buy shares for fear of missing out on the so-called Santa Claus rally. The S&P 500 rose by more than 4% in December alone and is up 24% this year. If history is any guide, this dynamic is likely to continue in the short term, and the end of the year is usually a period of growth for stocks. The S&P 500 gained 1.3% on average over the last 5 days of December and the first 2 days of January, according to Stock Traders Almanac data since 1969. Traders' activity began to return to stocks, and Bank of America clients bought $6.4 billion in U.S. equities on a net basis over the past week, and the largest weekly net inflow since October 2022, Global Research said in the report from December 19. Ned Davis Research this week recommended investors shift another 5% from cash to stocks, bringing their stock allocation to the maximum in their portfolios. So the markets are buzzing with the anticipation and positive news coupled with a belief in a bull market for the S&P could encourage traders to end 2023 on a high note. Meanwhile, analysts are bearish about the US dollar, and the US currency has been locking its wounds after the Fed's policy meeting in December. The Federal Reserve has taken the lead among major central banks in terms of when it will make its first interest rate cut. This fact is steadily pushing the US dollar into a weak year. U.S. Federal Reserve officials have rejected the idea of a sharp rate cut, but the talk has done nothing to help the dollar. Today, the US dollar index is trading at 101.70 or 0.13% below Friday's close. At the end of last week, the index fell to 101.42, the lowest level since the end of July. As of today, the dollar index is on a track to decline by about 2% in 2023. The Canadian dollar has strengthened to 1.3257 against its American counterpart. If the loonie depended only on the Bank of Canada and did not correlate with the oil quotes, then its prospects for the end of the year would be the brightest. The loonie has already advanced to the levels of early August, largely due to the fact that the fall of the US dollar offset losses from lower oil prices. Besides, the Bank of Canada is less optimistic about the future of interest rates and has not yet spoken about potential easing of monetary policy. Consumer inflation was at 3.1% in November, defying expectations of a slowdown to 2.9%, confirming the central bank's view of a stubborn inflation and potential return to rate hikes as a result. The crypto market today has taken over all the risk appetite, and the underlying assets were trading in the green zone, but movements were rather cautious. Bitcoin rose by 0.2% to $43,620, while Cardano and Ripple are the most successful, adding more than 3%. Bitcoin had a good start in a flat movement between the levels of 43,000 to 44,000, and today the token may fluctuate within these borders. Going above the range may lead to the price to retest the level of 44,200 or even 44,700. The alternative scenario is a decline to 42,200. And that's all for today. Ask any questions and share your viewpoints. Follow developments in the global financial markets on the InstaForex TV channel, and see you online tomorrow.